Greg,
Dave,
how are you?
good to see you.
Yeah, good to see you too. Another week goes by, you
They
know.
just fly by, don't they?
Yeah, it's like the movie Groundhog Day. It's wait a minute. We back
Well,
here again? It's like the alarm goes off. All right, it's BizTalk Weekly.
yes. Yeah, yeah,
So
it's good to be
always
here.
fun. Yes, it's always good to be here. Always enjoy our weekly session.
Me too. Me
It's
too. I
like
look forward to them.
it's like my business therapy.
Yeah, yeah, I hear what you mean. Well, sometimes talking things out is beneficial.
No question. I've certainly uh, gained a lot from the insight that you bring, and I would imagine you feel the same in terms of how we share information.
Absolutely. Yes. Collaboration is a very strong concept and real.
So here's a subject that I think would be very interesting for our audience, and I want to ask questions about a subject that I've always disliked, which is finance. It's my least favorite part of business. I only like counting the money. I didn't like that I had to spend it and pay bills and cover overhead and things like that. I just figured that whatever it said in the bank, that must be what I have, as opposed to, oh, you have to run a checkbook and you have to debit what you've spent. So, and now of course I knew that, but that didn't make me manage it any better.
Right. That didn't mean you enjoyed it anymore. Yeah.
No, so what does an entrepreneur do like myself? And there are plenty of me out there that it's just not their area of expertise. They don't like it. They're not good at it. They don't want to pay attention to it. So where do you go with that? Because you have to do it
Yeah.
if you have somebody. So what's your suggestion in that area?
Yeah, I think, and it's a really good question because there are a lot of business owners, I think, who are uh, intimidated or just don't want to spend their time kind of counting the beans, so to speak. There's other things they would rather be doing, and quite frankly, there's things they're much better at than doing that. So it's clearly something they have to, get off their plate. Either through hiring somebody or contracting with somebody, a bookkeeper, a CPA firm, whatever the case. But I do think it's incumbent on business owners to be astute enough around this topic that they can ask solid questions, and make sure that they're understanding maybe not how the numbers get put together, but the story that the numbers are telling them.
So if you were to break it down into its simplest format, what's the basic area of knowledge that an entrepreneur should have, and if they don't have, they should become knowledgeable?
Sure. I think they should, understand what an income statement is, what a balance sheet is, and a cash flow statement. And they should understand, again, at a very high level, how to interpret those, or if they're having somebody interpret them for them, again, that they can ask those pointed questions to make sure that they're understanding, kind of the, okay, so what, I'm showing a profit, my profit margin is up 3% this month over last month. So what? What does that mean? What does that mean to me as a business owner? Well, it means I'm doing something that's causing the business to be more profitable in terms of, efficiency. So was there some kind of action I put in place that's causing that? Is there a change in product mix? Is there, did we increase prices? Did we find, cost of goods sold reductions? What's taking place that's causing the numbers to come out the way they are?
Yeah, it's interesting because, of course, I always looked at accounting. I did take an accounting course uh, when I went to school to become an optician. And so I learned some basic, accounting functions. So give a Reader's Digest version of an income statement, a financial, a balance sheet, and cash flow statement. So
Sure.
I'm a new owner. I tell me what it is. I'm hiring you as my accountant.
Yeah, yeah. No, let's start with a balance sheet. A balance sheet is really telling you at any point in time, sort of what you own are assets, what you owe others, liabilities, and what's the residual in the business, which is the equity. Right? Some companies have a pretty simple balance sheet. If you're a high service business, web-based, you may not have a lot of brick and mortar, maybe you don't carry a lot of inventory. Customers pay at the time of sale, so you're not carrying receivables. You don't have many fixed assets. You don't owe many vendors money. Maybe you owe, your weekly or every other week payroll. So it's pretty straightforward. But for some businesses, manufacturing businesses especially, that balance sheet can be pretty complicated because there are things like inventory and receivables, fixed assets, liabilities that are owed to your vendors or or to others. Maybe you've got loans outstanding. So that balance sheet now starts to get pretty complicated. But just think of it as, it's kind of telling you what your net worth is, right? Assets minus your liabilities equal your equity in the business.
So if you have, so you mentioned assets or inventory. You own that inventory, so that's an asset, correct?
Yeah, correct.
Okay. I have receivables, so obviously I'm owed money, so that's an asset, correct?
That's an asset, yeah.
Okay, so whatever those numbers equal out to and whatever other furniture and fixtures, if you bought it and didn't lease it, okay, that's an asset.
That's right, yeah.
That's a depreciating asset, am I correct?
That's correct, yeah. If it's on your books, then you're going to depreciate it.
Okay.
Yep.
So, I mean, I think of things like computer equipment, the day you buy it, the next day it's worth less money because it becomes obsolete very quickly. It's like a
Right.
car, you drive it out of the showroom and it's already worth X amount of dollars less.
Right.
So now the liabilities would be, I owe vendors. I bought the inventory, so I have this inventory for 10,000, but I still owe out 3,000. So I only have a gross asset of 7,000. If you would,
yeah, because you've sold some of that inventory, right? Yeah. But at the time you bought the inventory, you put $10,000 into your inventory. And like you just said, you owe somebody $10,000 because they supplied you that inventory. Normally they're going to give you some kind of terms, right? 30 days, 45 days, whatever the case. But that liability is sitting on your books, and that's something you owe to your vendors. It's important to know that number, right? What I owe, current liabilities, current meaning they're due, relatively soon, like within if they're current, in accounting, they talk about a 12-month period. So a current liability is going to be due within the next 12 months. Well, it's important to understand that you're going to owe that money within that period of time and to keep an eye on your cash balance, right? Because you're going to need to have cash available to pay those vendors.
So the sales that you make though, so I got this inventory for 10,000. I sold it for 30,000.
Yep.
Okay, so I made a gross profit of $20,000, but is that on the balance sheet? Or is that only on an income statement?
So once you've sold it, right, now you're kind of hitting on that income statement, right? You're recording the revenue, you're recording the cost of revenue or the cost of that material, and you're recognizing a gross profit, like you just said, sales minus that inventory cost. Now none of that inventory is showing up in your balance sheet, but that transaction now is kind of shifted, I'll say, over to the income statement. And that income statement is telling us, it's really not telling us a point in time like the balance sheet does. It's over a period of time. So we might look at an income statement over 1 month, 3 months, a year, that sort of thing. A balance sheet is just on a specific day, usually the end of a month. Here's what you own as an asset. Here's what you owe others as a liability. And the difference is that owner's residual, owner's equity.
Right, and that goes into the value of the business.
Right.
So
But that income, you talked about that, you mentioned the income statement. That's really telling us more of like, okay, is the business profitable or not profitable, right? So it's telling us what our revenue is, what our cost of revenue is, for selling goods. We've got a cost of goods sold. Telling us what our gross margin is, which gross margin is really your revenue less your direct costs of that revenue. A lot of times it's labor and materials and maybe some overhead if you're a manufacturing business. Then you've got all those administrative and overhead costs, right? Insurance and rent, or kind of office expense, professional services. You kind of think of it, sometimes they'll say those are below the line, meaning they're below the gross margin, but they certainly factor into your net income, your income before taxes.
So when you sign a real estate lease for property to open up a business, is the lease an asset, but the rent owed a liability?
That's a good question. So when we lease something, we don't own anything.
Right.
So there is no, from an accounting standpoint, there is no asset.
Okay.
Now, once a month, when you owe the rent, there's a liability. Right? Now you don't put the whole liability. Let's say you sign a 3-year lease, you don't put that whole lease on your balance sheet as a liability, even though you owe that money. Right? It's more of a recurring transaction. Let's say that same building, though, Keith, you bought it. Okay.
They have an asset less the mortgage, which is your liability.
Right. Now you do have an asset because you own something. Now you owe somebody. Now you've made a commitment, a long-term commitment through a mortgage, and that's going to be a liability. It's interesting because those could be two companies do, just one leasing and one owning, and it's going to show up differently on their financial statements.
So it's
cash flow wise, it may not look any different, but it would on a balance sheet and an income statement.
So what comes up for me as I think through this, because I've been through this for 40 years. So I started out knowing nothing. Okay. But I've always been a voracious learner. I always wanted to learn. And I think that's, one of the things that entrepreneurs, if they're not doing it, they should. You can't just say to yourself, I'll hire an accountant. He or she'll know. I don't want to think about it. I never took that position. I always felt that I need to learn about everything that I do in business, at least on a level that I can talk intelligently and understand what somebody was telling me. So although I say, like I hate it, and I do, I don't find this, the only thing pleasurable about income statement or balance sheet is when it's in the right direction.
Yeah. When it's telling you good news.
Right, exactly. So I just feel that, and I have no real experience. I was about to say today's entrepreneur, I don't know the answer to this, but I would have to say that when I do coach an entrepreneur on sales and marketing and business building, I always tell them, learn everything. You own a business, okay? At least know enough that you can talk intelligently. Whether they will or they won't, is, I can't control that. But I do think it's good advice for anybody that's gonna go into business.
Well, remember, sometimes, if you hire a bookkeeper or even a CPA firm, they're gonna give you the numbers. Okay, they're gonna give you those financial statements we just talked about. But you may not get a lot of input as to, like I said, okay, so what does this all mean? So as a business owner, maybe I don't need to know how to put together a balance sheet and an income statement and a cash flow statement, but I need to know how to read and interpret them. Okay? So those are the things that I think as a business owner, you need to understand. Now, maybe your CPA is a trusted advisor and can give you that feedback. Maybe you take some classes. There's always classes out there called kind of financial overview for non-financial people. Okay, so courses that are built for somebody like you who, hey, I didn't go to school for this, but I need to know enough so that I understand what's going on with my business, and the numbers tell you a lot.
So what I'm really stuck in my mind on, which I think is real important, is the actual balance sheet at a point in time.
Mhm.
And so I'm thinking about it, it's like, okay, business is great, everything's flying, wonderful. At the end of the day, you count your numbers, we're up 20-30%, and then you go, where's my money? Okay, now what a balance sheet will tell you is where your money's sitting. Oh my
Yeah.
God, I bought too much inventory. They had a special deal. And I used to get into trouble with this in my optical stores, because invariably the guy comes in, he's got, I have all these new things to show you. And I love the fashion aspect of the optical business,
Yeah,
and I always wanted to have the latest.
big part of it.
Yeah. So they always had a deal. Well, if you buy this much, you get 30, 60, 90 billing. And I'm a sucker. Okay. So now, if you're wondering where your cash is sitting, okay, from a balance sheet perspective, it's like you just went out and committed yourself to X amount of dollars that you're going to have to pay over the next 90 days. Now, if you continue that, the next guy comes in and he's or she's got the same deal. And you go, oh yeah, I love that. Oh, that's the company has designer eyewear. I love that designer. And it's so the controls that need to be put in place for a guy like me, okay, are very important.
Yeah.
Because I think where I've had problems in business, it was always about an inability to control things that are controllable, like how much inventory do I buy? How much cash do I really have to spend? We made $10,000 last month. Okay, if I go and spend 15 on inventory, even if it's over the next 90 days, and I used to play those games, it's 5,000 a month for the next 90 days. I already made 15,000, but what it doesn't take into account, the next 60 days are terrible. Okay.
Right.
Maybe it's middle of the winter and there's a snowstorm and it's freezing and people aren't coming out, or inflation ticks up and food prices are high. I mean, these are real life experiences that people have to deal with that affect their business. So there's such a connection between money in and money out.
Yeah.
And you don't have control over the out, because the in, both of those, you actually have more control over the out than you do with the in. I can't force somebody to walk in my store or to come to my website and make a purchase. But I can control the thought when a guy comes in, it's a slow time of year. I know you have a great deal, instead of taking, 15,000, I'm going to cut it down. I'm doing 5,000 now.
Right.
So it goes. If the winter's good, I can always buy more. And I didn't have that control over my compulsion to have the greatest, the latest, and the best. And it had its, it was good for my business in the sense that people kept coming because they knew, if you want something nice, great selection, and plus me, of course, but so this is where having good accounting controls are so critical, and somebody who is going to try and control you in the sense, and I don't mean control you where they got you by the collar, but at least say, look, these are the risks you're taking if you decide that you're going to overbuy. Like, I would never really have those conversations with my account. One is, to be honest, I would just manipulate him. You know, I did my sales thing. It's going to be, business is good. And he would listen, but that's not, you know, that's me good and me bad at the same time. I'm a great sales guy, but bad, I'm hurting myself. That's really what I would want to do. I still hold the decision-making power. I still want my account to say, look, this is what you have in this point in time in terms of cash. You're sitting with this much in receivables, okay? Which today it helps a lot because the way it worked in my business, you know, I sold a pair of glasses, okay, to a customer. Let's say it was $400. Rarely did someone pay you in full. They gave you a deposit. Did they give me $10? Did they give me $100, $50? I mean, so it was all over the place. In a computerized situation, I can tell, well, I did 20,000 in business, but I only got 8,000 in deposits. So I'm sitting with 12,000 in receivables. Well, how quickly are people going to pick up their glasses? Well, I know it's generally about a week cycle that they're ready. Okay, now how long is it going to take them to pick it up? So all of a sudden they're sitting there. The ones that were the worst was when they gave me on a big order, small deposit. I'm worried about those because sometimes they go home and they have buyer's remorse, you know, and they say, why did I let Keith convince me? I know I love those glasses and I wanted them. So they'd sit on the shelf and then you call on the customer. Hey, you know, it's Keith or whoever's calling and say, you know, your glasses are here. They're waiting for you. Yeah, I know, but it's got this happen, that happened. Yeah. So now I went and spent money based on my gross sales, not my net. Okay. And that's, I think, where probably a lot of businesses go wrong. You know, they look at, I made X amount in gross sales, but it's not cash.
Right.
You know, it's not cash. And you got to run your business based on cash, not on the hope that all your receivables are collectible.
Especially a smaller entrepreneur business, I think you really need to be very on top of your cash situation, right? Not just what's in the bank, but what you have upcoming for expenses, or you know, maybe you've got you know, maybe your insurance is due once a year, and that's a spike, you know, in terms of it's not just a 1/12, you know, that I pay every month. It's something I pay annually. Property taxes are a big one. So it's really important to not only understand, you know, what's in my bank account, but also what's coming up that I'm going to have to spend money on. I used to have an instructor, Keith, who said business mistakes end up on the balance sheet. Meaning that, you know, if you make a mistake and you buy too much inventory, it's on your balance sheet, right? And it sits there, right? And it can be there for a long time. Or you have a receivable to a customer and they aren't paying, right? And now that receivable that's supposed to be paid in 30 days, now it's out 90 days or 120 days. And it was a really good analogy that he made of how to view the balance sheet, because you know, it should be that your business is turning over cash, right? You're buying inventory, you're selling it, it's going into receivables. That receivable gets paid, it turns into cash, and you're using that cash to reinvest in your business. And that whole cycle then starts over again. So, you know, when I say reinvest in your business, you're buying more inventory, right? And that whole cycle starts over again. If you bought glasses that were out of fashion, right? They weren't the right style, but you got a good deal on them, but nobody's buying them. Those glasses are going to sit in your store and they're going to sit on your balance sheet. And eventually you've got to do something about it.
So, you know, what's after 40 plus years, it finally dawned on me that the balance sheet is the most important document that you run your business on. Am I correct?
I think if there was one thing that I would look at as a business owner, it would be my cash flow statement, because that's really a result of both your balance sheet and your income statement. But what I would say is, as a business owner, you should know kind of from at least on a monthly basis, kind of what the picture, which is what the balance sheet shows us, kind of what the picture of your business looks like. And when I say picture, I mean, what's my cash position? What's my receivable balance? What's my inventory? Right? What are my assets? What do I owe? What am I gonna owe? What am I gonna have to pay out in cash here in the next 30, 60, 90 days? So I think, it's important to understand all three of those concepts: cash flow, balance sheet, and income statement. And again, each one of them serves a unique purpose. And I think it's important to understand all three.
So, thank you for that. To me, it's, again, I'm learning, and I say after 40 years, as you can tell, as I talk, I understand all these things.
Yeah.
But I never really paid attention to it in a way about how connected those three things are. I know how to create a cash flow statement. I know how to create an income statement. I mean, I know how to do all these things because I made sure to learn it. But it's like reading a foreign language, but not knowing what the words mean.
Yeah.
So you got to be able to understand it. So I'm really harping on this point because I really think that today's entrepreneur, in the kind of business that a lot of the younger people are running, which is online, easy to get online, but not really understanding these things, or especially if they also have online and offline.
Yeah. Yeah.
These numbers mean things.
Well, and I think, even an online, let's say you're an online business, but you got to carry inventory. Okay. Because when people order something nowadays, they expect to get it tomorrow, the next day. Right? They're not going to wait 6 weeks. They're not going to wait for you to order it from China, have it shipped over here and sold to, right? They expect that you have it in your warehouse, in your garage, in your basement, and that you're going to ship it the next day. So it's important to have that inventory. Well, if I got to buy that inventory before I can sell it, typically. Now, if you're a custom business, that's completely different. But let's say you're just selling product off the shelf, so it's kind of something that you've purchased and you've got for sale on your website. Number one, if you don't have it, they're not going to buy it. So you got to have some inventory. And when they do buy it, you got to make sure you've got enough of that inventory. And it becomes I think inventory is one of the bigger challenges that business owners can face, because they really need to understand what customers are buying, what trends are taking place out in the marketplace. Like you mentioned before, you need to make sure you had the right kind of fashion glasses, right? People weren't just buying glasses because they needed to see. They were buying them because they wanted to make a statement on how they looked.
Yeah.
So you needed to, I would assume those things changed frequently. So you couldn't just buy the same inventory over and over and over again. And in today's day and age, customers expect, and customers, their desires, their wants change so quickly that as business owners, we need to be able to change on a dime. Right? I think the days of buying, 6, 12, 18 months worth of inventory is probably gone, because it's too risky. Right?
And again, look, there are certain, products that are commodities that I'm sure, with a long history of how a product sells, that both the manufacturer and the distributor knows that they need certain amount of inventory on hand at all times. But you don't know that day one when you open a business. You know, you have no history. You just say, okay, you know, if you're a distributor, you get that information from the manufacturer, you know, what's the best sellers, things like that. But, you know, the more I think about this part of a business, it's so critical. It's, you know, it's like having a car with three wheels. You know, if you're not running on all cylinders, you will, there's going to be a loss somehow. There's going to be a place where it just, the business is missing something, and you as a business owner is losing out.
You know, we really saw it during the pandemic, Keith, where the supply chain was broken. And when we talk about supply chain, you know, that's really a product coming from wherever you're buying it from and coming to your physical location, right? And so supply chain is a lot about transportation and logistics, but also sometimes supply chains got broken right at the start, right? Because our manufacturer that we were relying on was closed. The transportation company that was going to bring it to the port in the US was shut down. The port was shut down. The freight company, the trucking company that was going to bring it to our facility here in the US, all their workers were out with COVID. So there were all these places where we started to realize, wow, our supply chains are really fragile and they're really critical. And all of that goes back to cash flow, right? If you're sitting on this, you can't get this inventory into your facility. How are you going to service your customers?
Yeah. I've got, you know, I keep thinking back to my long history of business and how common it is for new entrepreneurs. I mean, really, it's like being a new parent. You just, you know, you need somebody to guide you into like, oh, what do I do? The baby's crying. You know, what do I do? I don't have enough money to pay the rent. Oh, well, what happened to the excess cash that you're supposed to have in the bank to cover X amount of time of, you know, rent and overhead? So what seems to be crystallizing in my mind is that, you know, I don't even know how to get this point across to entrepreneurs other than what we're doing right now and getting this information out there. Because I think there's a lack of knowledge for most entrepreneurs who don't have a financial background, who didn't go to school and take accounting, you know, take a course. And I know you say that these courses are available for, you know, learning, you know, finance for non-financial people, but I don't think people generally even think about it. They're so frazzled with, you know, opening a business, starting it, running it, you know, and they're not saying, yeah, I'm going to take a course. No, yeah, I'll get around to it. So I think hiring the right financial person, whether it's, you know, it depends on the kind of business, certainly, unless you're running a major company that you started and you have a lot of cash, raised a lot of money, that you have the ability to hire somebody. What kind of a person should an entrepreneur look for as almost like a financial mentor?
Yeah, I think, you know, certainly somebody who's got the accounting and finance background, right? Somebody who's been educated in that area or has performed those kind of jobs. You know, I think it's a progression, I think. So let's say I'm early on in my business, probably a bookkeeper who just understands kind of basic accounting concepts is just fine. You know, they're detail orientated. They know they know the concepts, so they understand what inventory is, they understand what accounts receivable are, they understand how to make the transactions, how to take what's happening in your business and transact that into your books, right? So they understand what a sale is, they understand cost of goods sold, right? As your business grows, now I think you need somebody who's probably a little more sophisticated. Okay, so now maybe as opposed to a bookkeeper, it's somebody who now they have all those skills that bookkeeper has, but now they also can do more report development. They might be able to take information and put it into a different format for you as a business owner to help you understand how your business is running. Okay. So I think, and again, as your business grows, you can continue to progress along that type of a person with with that increasing skill set. And again, I think it's the kind of thing, Keith, where if you have that resource and you feel like, okay, I have a connection with this person, they're providing me with what I feel like I need, they're giving me a little bit of advice, then that's probably okay. If you're getting the numbers late, they're not accurate, they don't really, you ask questions and they really can't answer them, or you're not getting responsiveness from them, like that should raise a red flag, right? And say, hey, maybe I don't have the right person here for my business. And so don't continue to go down that path. Take a look at what an alternative might look like.
So are there different levels of bookkeepers, or a bookkeeper's a bookkeeper?
Well, I would say, so if I was, for me as a new business owner, I would start with something like QuickBooks to run my business from as a financial package. And there's a lot of bookkeepers out there who are really good at QuickBooks. They know how to use it. They know all the different modules. They know the reports that they can run out of there. But you might have somebody who's been a bookkeeper for a couple of years, and then you might have somebody who's been a bookkeeper for 20 years.
I've heard the term full charge bookkeeper. What does that mean?
So that terminology gets used with somebody who I'd say has a broad understanding of bookkeeping, meaning they would know how to handle inventory and accounts receivable and fixed assets and depreciation. Okay, they can do all of the bookkeeping, as opposed to somebody, let's say a less experienced bookkeeper might be challenged around things like inventory or fixed assets, or how to calculate depreciation, or how to book a complex loan transaction or something like that.
So would that be preferable for a startup, a full charge bookkeeper, as opposed to just a basic bookkeeper?
I would base it on the type of business I had. Look at me.
Give me an example, a restaurant.
Okay, a restaurant. I think restaurants can have some complexity from the standpoint that they've got food costs, right? You probably have a building that you're either owning or leasing, so you got property that you have to care for. You got inventory. You definitely have inventory. You probably don't have receivables, because customers pay when they consume the product. You probably have you've got employees, so you've got employment challenges, which a lot of times a good bookkeeper can help you make sure, like they ought to be making sure you're doing your payroll right, you're filing your payroll taxes right, your sales taxes, those kind of things. So I would say a restaurant is kind of from a complexity standpoint, kind of a mid-level for a small bit, for a small business. It's got some complexities to it. Not more complicated than a company who's just, let's say, providing some kind of service like a plumber who just has, maybe himself and another couple of people working for him, doesn't really carry any inventory other than maybe some small, repair items, maybe has a truck or two or something like that. Right? And on the other end, I would say manufacturing gets to be much more complicated, manufacturing and distribution, because now that inventory concept we talked about before can be really a big item on your balance sheet, right?
So what, how, not what, but how often should a business owner review with their financial person the balance sheet, income statement, and cash flow statement?
I would say ideally they should be doing it monthly. I think you absolutely need to do it quarterly.
Right.
Okay. And I think once a year, maybe twice a year, you should have a more thorough and advanced review. But I think if you can get into the habit of doing it every month, that's the best thing to do. If you're not doing it every month, my concern is that things might slip through the cracks. And now all of a sudden, an issue that took place the first week of October, you're not finding out about until January, right?
Yeah.
If you're not paying attention to the numbers.
Yeah, my accountant would come in once a month.
Yeah.
And, obviously take, clean up the books in terms of, I don't know if we were even electronic back then. From what I can recall, we weren't electronic yet in the beginning of my business, but this has really been great. It just goes to show you that no matter how long you've been in business, there are areas that you never really understand maybe the way you should.
Well, certainly there's always more to learn, right? Whether it's about finance or sales and marketing or operations or manufacturing, there's always more to learn. And I think that's one of the exciting things about business and business ownership is we should never stop learning as business owners.
Yeah.
And we shouldn't be intimidated by a particular function within our business just because we're not trained in it or we're not experienced in it. Good business owners will figure it out if they're not afraid of it. And they hire the right resources, they find the right people to kind of fill in where they maybe lack some of the knowledge that they need. Keith, you were talking a few minutes ago about kind of the household issues, right? The baby crying. That's what struck me. You said that. All of us have at one time or another had to manage our personal finances, right? Now, maybe we've done a terrible job at it, but we've at least had some experience with checkbooks and cash flow. And hey, I get a paycheck once or twice a month from my employer. I got expenses I got to pay. So even somebody who says I despise and hate finance has had some experience managing their own budget. So that's one thing you can kind of use, I think, to kind of, as a new business owner, say, hey, I've managed a personal budget before. Now I'm going to be managing a business budget. It's conceptually, it's similar. I get it. It's a lot different, but at least that should help somebody say, I don't need to be intimidated by this because I've had a little bit of experience in doing this.
Well, I want to thank you. This was very enlightening. I think this is good information that our audience will enjoy. Well, I don't know if enjoy is the right word. I have this aversion, as I've told you, to accounting in general, but it's so critical to running a business properly, and I don't want people to be afraid of it.
Right.
I never feared it. I just didn't like it.
Yeah.
I didn't like when my accountant gave me bad news. or told me that I have too much inventory.
I think we were talking either when we first came on, or maybe even a few minutes before, but a lot of times as business owners, we work on the things we like to do and not on the things we should be doing. So I'm sure for you, you always gravitated towards sales and selling because that's what you love to do,
Yeah.
right? And you're good at it. So the things you weren't as good at, finance, the numbers, you gravitated away from. But I think you're exactly right. As business owners, let's not be afraid to kind of sink our teeth into some things that maybe we're not, naturally good at, but we need to make sure we've got a good enough handle on it so we understand how those numbers are how our business is impacting those numbers and vice versa.
Thank you. This is a good episode. I hope everybody
Yeah.
enjoy it. And until next week, Greg, it's been fun.
Thanks, Keith. I enjoyed it.
Thanks.